Welcome to the Trading Lounge and the Day Ahead Report, and here we're looking at the S&P 500, and look, everything's pretty much going according to plan, and you pretty much know the wave count. So we're looking at the possible top of wave 3 there, and looking for wave 4 to unfold here. Because wave 2 was simple, then we just have to look at wave 4 being more sideways and complex. And in fact, the wave 4 from the textbook type of thing comes back to 38.2%, so somewhere in amongst there. So the price can pull back to here, this fourth wave of one lesser degree. And it's also normal for the wave 4 to break the trend line channel as well. That's a norm as well. So let's just see how that sort of unfolds. But the internal wave count for wave 3, the 1, the 2, the third wave up to here, the fourth wave here, then the 1, the 2, the 3, and the 4, and the 5 across to here. All seems reasonably, in proportion, in perspective, and so forth. So we're really just seeing the market vibrate across the 1550 here, the midpoint, 5 being the second strongest number in the market. It's just expected to be held there for a while until things get sorted out. But once it is complete, we'll see a push to the upside. So look, we the wave force can be there for a while, so I think it's reasonable to accept that we could be here for, well, also including the weekly bullish cycle as well, where we have the first bit of, if we have Friday strong, then Monday's likely to be strong, and Tuesday sort of profit taking, and Wednesday's a bit of a V-shaped day where it's down in the morning and up in the afternoon. And Thursday being the bear day as well. So these days are the ones that normally take out our stops as well. So it could finish on the Friday, and we could be moving up from the Friday. So it's just a couple of days of corrective swings here before we see any sort of further upside here to complete this wave 5 up here, which should be the same length as this wave 1 here, and also roughly the same time as well. So we can be looking up at 1570, 1580, up there in group 2 anyway. It will all just depend on how large the correction is at the 1550 here. The larger the correction, the safer the next trend as well. So because of the accumulation process there. This is the same for obviously for the Dow Jones as well, the same wave count as such. We're looking at 14,500, which is the next level. Even if I'm wrong in this count here, if I've missed a little wave in here, because it does look it doesn't look quite right in here. But even so, even if the market does push off the 144 up to the 145 here, then we can expect a larger correction across here, because 5 being the second strongest number, and it's also the halfway point between the 14,000 and the 15,000 further up as well. So we normally find that it has some sort of bearing, and so we can expect a larger correction across here, even if that's not the top of wave 4, wave 3 there, because when I look into that a little bit through here, we were looking at this little wave 3, 30-minute chart here, but looking at this wave 3 here. So we were looking at this all appeared corrective in here, so we could label it pretty much as we've done here, except that wave B should be in through here. But not that it matters that much, but we've got a 5-wave structure in through to here, but then we've got this extra bit here, so obviously that this may be up for 1 here, and an A and a B and a C here for wave 2, for 3, for 4, for 5, but I don't know, it just sort of appears better as a corrective pattern here. So as you can see here as well, this move that's come down through here also appears corrective as well. It's not an impulse wave, which would be 5 waves to the downside. If that was the case, then we'll get another 5 here. So we can still see further upside here, so I may have to adjust that there and figure out what's what there. But the European markets are the same. So when we have a look at the the DAX here, as I mentioned, the 8,008 is a profit-taking number because it's the first even number before the next whole number. But in this case, it's a large number anyway, so we're going to see the market work across here. But the wave count is pretty much the same, and the FTSE would be the same as well. But it's dealing with a medium level now at 6,500. Yes, it's an unusual number, but once you get to know it, you can kind of depend on it. And, we're seeing it swings across there. So obviously we're looking for the top of the third wave there, and there'll be the fourth wave correcting now. So with the FTSE, it could stick there, a bit longer. The Australian market, well, it's a little bit tricky, this wave count, and the reason being is that we've got the banking sector, which is leading the Australian market to the upside, and the cash market, the ASX 200, is in the bigger picture is following the banking sector. So if I just take a bit of time on this one here for a moment. So this is the XJO here, the cash market, the ASX 200. And basically what we're looking for here is, from here we're looking for 5 waves up like that. So we're looking, for a larger correction through here. So the XJO here is very similar to the banking sector. So if I go to the XXJ, you'll see that it's pretty much got the same sort of pattern there. Mind you, it's moved, it's moved up further, but tracking it from this point here, we're also looking for, a 5-wave structure to the upside here as well. So we are looking for a top here. But when we look at the materials sector, it's not like this here. It's so that would be the XMJ, the BHPs and the Rios of the world. So you can see that it just hasn't made a move at all, has it? Up here it's not the same picture. So there is that drag on the market. So even the XJO in the sort of big picture, it's following the banking sector, but on a subtle note, sort of the intraday structure is really being sort of pulled around, and it's very difficult to read. So when I look at this particular pattern through here, there's too many different ways to be able to count it in terms of Elliott. So it's not a great use. We can say that it's sort of in tune with the S&P 500 and the FTSE to some degree. We can see this is a 3-wave structure here, so we could call this the A, the B, and the C here. If that's the case, then we'll have an ending diagonal triangle up here with wave 1 here, wave 2 here, wave 3 to here, wave 4 to here, and then an overlapping wave structure into wave 5 here for the top of wave 3 here. But I wouldn't want to call wave 3 top in through here just yet, because I know the S&P 500's got further to go up. So while it's sitting above, when we're looking at the 5,100, we also got to take in consideration the first level below that. So while the market's above the 5072 area here, then we need to look at it. Yes, it is not a very positive pattern to the upside, but we still got to acknowledge that there's levels of support. So we've got this support here, and as long as it stays above the 5072, then it's still supported above here. We can also consider that this level here, this is still really the first high above the level here. And it's doing its correction in the cash market yesterday, the ASX 200. We do have 5 little waves down through here. So in a 5-wave move down here, we can expect a 3-wave reaction and then another 5 down. So that's on the cash market. So we need to sort of expect that. The rally that could come from here today would be partly based on the lower US dollar and rising commodity prices. So we're seeing precious metals up, base metals up, oil up. So that could certainly help drive this to the upside there as such. So look, I'm just a little bit sort of unknown about this area here. So As I mentioned, this is still the CFD here on a 20-minute chart. The cash market yesterday had these down here in quite a clear 5-wave structure yesterday. So this is also looks corrective here in 3 waves, and also 3 waves here. So we can be looking at an A and a B and a C back up here, and then to the downside. However, the 5130 here, support on that would see further upside through here as well. But that 5 waves on the cash market should see another 5 waves down in due course. So just be mindful of that, and any bounce up would be based on the commodity prices. So let's have a look at that. I just want to have a look at this is the materials sector, the XMJ, which, and so BHP is the same. And we've talked about this before. This particular wave count coming up through here. It doesn't, as it is, it doesn't count as an impulse wave. It actually counts as a corrective wave, and a corrective wave is a 3-wave structure. So it's so a corrective wave is like this here. So I've just put this into shape here, into an ABC correction through here. So and then this this A, B, and C here, this C wave would be in 5 waves as well. So we'd be looking at 5 waves here, so to speak, and that's pretty much how that sort of pans out through here, actually. So that would be an A and a B and a C. The C wave's got 5 waves in it, which would be the up for 1, back for 2, up for 3, back for 4, and up for 5. And so that if that's the case, then we'd be looking at this low being taken out through here. This move down through here counts better as a 5-wave structure than it does as a corrective structure. So that means that in the short term here, so if we look at say 1,000 here on the materials sector, so if I just put that major trading level in there as such, then we could expect a bounce off here. So that 5-wave structure would obviously extend to this point here. If we do get 5 waves here, then we do get 3 waves here, and then we will get another 5-wave structure down through here. So we'll watch this bounce in the commodities very closely, but once it completes itself, if it shows a bearish pattern, then we'll go with that. So just be a little bit mindful of that. There's no real sort of in the sort of medium to bigger picture. The material sector are not showing that we're in a trending market. It's really based off the finance sector, and of course also we've got consumer discretionaries and staples, cranking to the upside as well. So there is other markets there that are supporting the situation. But anyway, that's that. Let's have a look at the commodities. Just before we move on to the commodities, this is the Shenzhen here, which is quite similar pattern to the Shanghai as well. The reason for mentioning this is that it's at 1,000 here, trading level 1. So as we've shown this before, but it's just going to be sticking here for a little while, because what you need to sort of understand is that yes, we do have an impulse wave up here, which is a positive aspect. So a 5-wave structure. So after a 5-wave structure, we'd be looking at some type of corrective pattern. As such, so it can come down, to the 38.2% mark, which would probably be around the 920 here. So that's possible. But the main point is that that the things have got to be in perspective here. So the length of this here, if you took that as say 60%. Then you would need to take this as 40% in terms of time and price. So it's got to, this has got to rebalance itself. So it's got to, it's got to have a decent sort of pattern here somewhere. So the main point is that it's not going anywhere for a while. So we can't expect to get some strong leads, from China in the short term here. We can expect corrective patterns in the short term here, which would also sort of keep, if the materials sector is going to continue to the downside in copper and so forth, even though they're rallying at the moment, then there's more to come just yet. So when we look at, this is the US dollar here on a 2-hour chart, and just pointing out that as we did yesterday, we're in a corrective pattern through here, and while it's pulling down here, commodities will rise. The important point here is that in this structure to the upside here, we can count this as 1 and back for 2 and up for 3 here. Yes, we can count this as wave 4 here. It's probably a bit big and ugly and all the rest of it, but it's still there, as long as it doesn't really overlap the top of wave 1 here, which would be the 82.30. So, realistically, while the price stays above the 82.50 here, then, this market, the dollar is still strong and it can, push up here further. If the 82.50 becomes the resistance through here, then we're going to see higher commodity prices, and we'll see lower here because we'll end up with a larger structure being lured back into the 82 here. Okay, so the 82.50 is something that we can be watching out for. It can help trigger long trades and short trades depending on other markets that you're looking at. The copper market here, we were looking at this yesterday, and quite simply being, once the market's moved down below a level, if it pops back up like this, in this case above the midpoint, the 350 here, this will be the same for the other base metals as well, and then it'll be positive. And we did take it as positive yesterday, while the US dollar's pulling back, and now we can see that that it's got a structure to the upside, so we can count this as wave 1 and wave 2, and we can look at this as being wave 3 here, and we can look at this pullback occurring here as wave 4 and a wave 5 still to go to the upside here. So we are looking at a bit of a positive structure. Yes, we've only got 3 waves up, and that is corrective, that's true. So I'm just assuming here that we will get the other 4 and the 5 here. So obviously this is going to help the dollar push up, the Australian dollar push up. If I just got a smaller picture on this, maybe let me just check. Okay, so there you can see it a bit clearer here. So we did have 5 waves here yesterday that we were looking at. So we're looking for a retracement level in here, which we got, and then we've got this strong wave up here, which has got the personality of a third wave rather than an A, B, C, an A and a B and a C wave as a corrective wave. Because normally in a corrective wave, the C wave is normally a bit lazier than the A wave. It's normally the A wave that's sharp, but in an impulse wave, it's the third wave is longest and the strongest. So we'll see this. So it's got the personality, I guess, of a third wave up. So we should see consolidation here as a fourth wave in here, but eventually a push up to somewhere in around that area there, same length as this one through here, depending on how far that pulls back through there, of course. But we'll be looking at that 5-wave structure there. And yep, BHP, US BHP. So look, while this is while this is rallying, and oil and precious metals as well, we can look at BHP here. This is US BHP. It didn't move down much yesterday, last night, but we are looking for, as I mentioned before, looking at the Australian one, we're counting this to the upside as an A and a B and a possible C wave up through here. So that would make this move down through here, wave 1 and wave 2 and wave 3. So I'm still counting it in both ways through here until we're clear. And the other side of the coin on the positive side is up for 1 and back for 2 here. And this is all the third wave up through here. And then this would be a fourth wave pulling back here as such. So let's just see how that let's just see what develops through here. But there will be some support for the materials sector based on the copper that we just looked at, and then this is oil here as well through here. So in a nutshell, if support is found on 93 down here, if support is this if support is found on 93, then we'll be looking at 90 as a retest of 95, or close to it anyway. And the structure that we're looking for up here does seem to have expanded on itself. We can start to see that the trends are slightly bigger to the upside. We were counting this as an A and a B and a C wave up here into the supply area, and it's doing that. But what I can see here is that we've got a little 1, 2, 3, 4, and 5 here. So we have to label that wave 1 now, and this ABC back for wave 2. And then you can see how this structure moving up through here from 91. We've got the wave 1, wave 2, wave 3, possible wave 4 here, and then up for wave 5. So that would just be the third wave here as such. So the 1, the 2, the 3, the 4, and the 5 to here, then a larger correction here, and then a move up here closer to the 94 as such through there. This will depend on the US dollar, of course, as well. In terms of trading, then support on the 93 there, but it does appear that we've got further to go to the upside here, but in trading terms we need that 93 as support there. The gold market's doing the same thing as well. This is just the bigger picture here. We are looking for wave sort of 4 here, I guess. And what I might do is just have a look at the Australian gold for a moment. Just bear with me a second till I find it. Just have a look here. Okay, so this is a daily chart on the stock code gold for the Australian market. Right. So first of all, we're dealing with the medium level here, the 150 through here. This I'm just going to put this on weekly here just to clean it up a little bit, to make it a bit easier to follow. Now, there's a couple of ways to count this, but the best count that I can see for this is this here. That would be the A wave here. I mean, the reason I'm pointing this out for too, because when everybody's talking doom and gloom about something, then you need to sort of start looking at the other side of it, of course. So this is sort of how I sort of see it, and we could have that low in place now in this situation here. So it's pretty much this really, an ABC here. I'm looking for this would be wave 4 here, and this would be wave 3 over here. So we've still got a wave 5 to go up a little bit further up through here. So we're looking at this being a corrective pattern through here. And the C wave here, a C wave has got 5 waves in it. So you can see the 1, the 2, the 3, the 4, and the 5 here. So the next question is that this move from this high down through here and this 5th wave here, is that finished? Does that have its 5 waves in? Because once that is finished, then we should see a move up into here as such, into wave 5, so which will take out the top of this one here. So yeah, look, it's just worth pointing out. What we'll do is we'll pretty much wait for the 150 to become the support here. Then that would be a clean, we've got a price point to work from there. But I think that's something worth noting. And we're also looking for a larger wave 4 in US gold as well, sort of closer to the 1500. So it's really a matter of working out those 5 waves there. So in these five waves, we're kind of looking at, in this particular structure, coming back to the US market here, we're still considering that, if we count this down here, down for 1, back for 2, 5 waves down here for 3, back for 4 here, and then down for 5. And in wave 5 here, we're looking for 5 waves. So we've got 1, 2, 3 here, and we're really still in this wave 4 here by the looks of it. You know, we were thinking that's the trouble with wave 4, so you just get sideways and complex. So we could very well be in the A wave here, the B wave here, and the C wave up in 5 waves here as well, close to the 1600 here. Once that's complete, this could also develop into a triangle as well, because all these moves here in 3 waves so far. We don't know about wave C just yet, but if it's in 5 waves, then we could call that a flat correction, and then we could see the wave 5 coming down through here to complete. If it's in 3 waves here, then we'll be looking at 4 and 5, a larger triangle pattern across here as such. So that's kind of where we are at the moment in terms of an A and a B and a C. So if we look into that C wave there going to the upside, that should count in 5 waves as well. So if I call this the B wave here, so we'll be looking for wave 1 here, wave 2 here, and then wave 3 to the upside through here, but that's not finished yet too, because the 3rd wave's still extending. So I can see that we've got wave 1 here, wave 2 here. It could be in there, but I doubt it. 3, 4. So I don't think that we're actually finished here yet either. So that would be sort of over here and over here, and then these guys over here would be here as such as a wave 4 here. So we've still got further to go on the upside here as well. I'll pull this apart here because you've got those 2 tops there, could cause that wave 3 to be in there, but let's just see how it goes. Look, short term here, a retest support on 1590 would see a new high above here, and that's the way to trade that side there. Right, okay, let's have a look at FX. Looking at the US dollar again, but this time on a 8-hour chart, just to get that whole trend in there. And as you can see, we're looking for 5 waves to the upside. And once those 5 waves are completed, excuse me, up, you know, where it is now, or maybe one more little push up. That's what we're trying to figure out. But once we've got a top in there, we will see a larger correction move to the downside. You know, and this larger correction to the downside would be the driver for commodities to even move higher. That's, you know, that's sort of worth sort of keeping an eye on. The other point here too is that you know, with a trend, and the same with corrections as well, but trends are a little bit easy to work out. There's a beginning, there's a middle, and an end, and this is the beginning here in its structure. We've got the middle here, that would be right in the middle of it there. That's the strongest part of the structure, and the ending of a structure seems to you know, it starts to creep and get sort of tied and so forth. So we can see that it's at the, you know, in its personality, we can see that it's at the end of its trend. As such, so it's got more weight here and more volume turning over and so forth. So, you know, we know that we're close there, and as we just pointed out a little while ago, when we look at the US dollar, we're looking at this as 1, 2, 3, possibly 4 here and 5 up here to finish, or it can be taken from here and up for 1 and back for 2 and 3 and 4 and 5 even further up through here. But we are looking for a top here. We just can't confirm that we've got it in there at the moment. But that 82.50 there was, you know, reasonably important there, and the 82.30 would create the overlapping wave structure and see a larger correction across the 82 there, and then we could put that wave 5 in there and as a possible top there. So let's just sort of see how we go with that. But with that in mind, we're looking at the euro here, and with the euro here, we've been looking for a wave 2 rally. So we've been looking for we've got this sort of sharp move down through here, and this correction has pulled back to its 61.8% around the 72 area through here. So this is a possible little top in through here. So it's starting to sort of shape up a little bit now. So this move down through here, we'd need to look at this as being an impulse wave, and then a 61.8 retracement level coming in here. So to the other shoulder here at the midpoint here, the 103, the 130.50 area through here, if support is found on top of the group 1 here, the 10, 20 and 30 through here. And if that's the case, once wave 2 is in here, that's got to have the right sort of proportion and look to it, in the right sort of proportion to that wave 1 coming down through here, the wave 2, and then down to the wave 3 here. But you need to be very careful because, you know, we're above this is the closest largest number, and we're above that. So really we should be looking at long trades. It's nice when you've got Elliott and the trading levels, if you're on the right side of the closest largest number. If the levels and if the price and the wave count are in the same direction, then you've got a bit of a setup there. So I wouldn't go short just yet. I'd certainly wait, and you know, having the price under the 130 here would be very sort of helpful, but that means that the US dollar would need to stay above the 82.50 as well. So if the US dollar moves above 82.72, yeah, it's a very important number because it's got 272 with it, the 8272. If it moves above that, then you've got your short here. But if that was going to be the case, it would probably be the same timing as the euro being, you know, mucking around, bouncing around on the 130 here. So you're just going to have to allow this more time before you can pick up a trend with this, or rather a trade setup. If the Elliott's suggesting to the downside, so you need a setup. So you either need, you got down for 1 and back for 2 here. Once this is completed through here, and you get a little 5 waves down and 3 up, then you could probably build a position. But as you know, moving down into group 1 is just, it's different moving up into through group 1, coming up this way, but coming down like this always gives you a bumpy ride. So just be aware of that and use the US dollar. Yeah, so okay, so the Australian dollar is pretty much on track as well, in terms of we're looking at our A and our B and our C rally through here, and this is rallying in line with a couple of things: the US dollar pulling back, making it a little bit easier, and also the stronger commodity prices, and they still have further to push up as well. Now, there's 2 ways to count this move to the upside. First of all, we were looking for this move up through here to be roughly the same length as this one here. And if that's the case, then we'll be looking up around the 10, sort of up around this area through here. Now, there is a reasonable wave count to have this here as 5 little waves here, up for wave 1 and back for wave 2. And then wave 3, which will take us into the sort of 104 area through here. At the same time, we need to look at this here in terms of the trading levels as well. We've got our arrival, our reaction, our first level of support, then we've created the first high above the level, and then we should see an A and a B and a C through here. As long as the market stays above the 102.72 here area, then we'll stay on the positive side of this market. Yeah, look, a move strong. If it doesn't correct back down through here and it finds support on top of 103.30 here, then you can go long from that point there. However, there is just the other count that I was sort of looking at through here, because a wave C is in 5 waves. So it also can be counted quite easily in this way as well. I'm just going on to a smaller here. It's a bit of an alternative count, but it needs to be sort of acknowledged. And this would be wave 1 to here, wave 2 to here, the wave 3 all the way to here, the wave 4 and the wave 5 to here. So we could actually have a top in place here, or one more little high through here as such, because this looks like a 3rd wave in through here. So a 4th wave and a little 5th wave. So look, and the thing with the levels is normally you get the 103 is the level here. So you got the arrival, the reaction, searching for support, then the first high above the level, then the A, B and C here, or the top of the market and further to the downside. So you do need to be careful here. So in trading long, just going over this again, the 103.30 as tested support would would help you get to the upside. And then if the 50 became the support here, the midpoint, then you can add on to that, because then you'll be looking at 104 at that stage. While it's in here and certainly under the 103.20 here, there's a possibility that it can come back into this area through here. So you need to wait for that. So if it does come down through here and move through 103 here and test lower here, that's good news. And then if it comes back up through here and finds support after it's tested lower and gets support here, then you can scale in through these numbers here once again and build the trade from that side. So look, it's just a matter of having you know, the Elliott gives us direction, and the price levels help us with the trade setup, because we really need to be on the right side of the closest largest number, but in tune with the particular pattern that's unfolding as well. So just give it a little bit of time here and to see what unfolds in this area through here. Alrighty, that's it. So the stock market's pretty much on track, just covering the indices there in that little wave 4, pulling back, and that kind of matches up with the VIX indicator as well. Just a bit of Elliott wave on the VIX indicator here. So this little wave 4 here, once that would be the pullback in the stock market as a wave 4, and then we'll have this VIX moving down through here. So as this comes down in a wave 5 here, then we'll see the wave 5 up in the stock market, and the bonds are the same with this as well. So it's the same all around. So we feel pretty much on track with what we're looking at. Alrighty, yeah, the other point is that Wednesday and Thursday collect stops, and as I mentioned before, coming into this with the robo trading and stuff, I've just got to put them out, as mechanical as possible. But you can take more profit at higher prices and so forth, and yeah, and manage it a bit tighter. Alrighty, well, good morning and good luck.